Well, welcome back to Finance Uncut. On today's episode, break the comics. So if we broke the COMEX, could we see $200 silver? Well, maybe. I don't want to give too much away because one of my first videos in the new year, we're actually going to look at what the price of silver would likely be if the COMEX was in fact broken and the paper contracts all were wound up. So stay tuned for that one. But you guys know that I'm with Keith Neumeyer, that I do have a triple-digit silver price target. So once again, for those of you that may not follow this channel all that often, and you do see some of the headlines, some of the titles of some of my videos with these big price targets, all I'm doing with those is sharing what other people are arguing, other people's price targets, and then we discuss it on this channel. I give my honest opinion, and then at the end of the video, I ask for you guys to share your opinion in the comments below. But I've been very honest. I believe we'll see triple-digit silver. I'm with Keith Neumeyer on this one. And so when people ask, what's your sell price, Steve? Well, I do think it's going triple digits, so $100 plus, but I don't, that's not how I look at trading, buying and selling the metals. Those of you will know I did a video on wealth cycles where I use wealth cycles to accumulate quite a lot of wealth. Very little amounts of money or currency into silver, then converted silver into real estate, and then now I've been converting real estate back into the precious metals once again. So what I do is I measure my silver and gold against other assets, and that's how I look at when to sell the metals. But it's my fundamental macro outlook that we're in an inflationary decade ahead, so it makes sense. So can we break the COMEX? Well, we should aim to. We know back in February of 2020, where the retail silver traders, those of us on the silver squeeze, we were 2 weeks away from draining the LBMA. And Sprott even said for their physical trust, the PSLV, that they were struggling to get silver. They were struggling to get it. So, what we should do is do everything we can to break the COMEX, and one who's been speaking out about this is Keith Neumeyer. And let's go have a look at a clip and see what ideas Keith has for this.
So, Keith, do you think that the current pricing system for the metals is broken?
I do, and I suppose it depends on what side of the equation you're on. But if you're part of the system, part of the banks, yeah, I think they love it. Mm-hmm. But if you're a miner, who feels that we're not getting fair dollar for our metal that we use blood, sweat, and tears to pull out of the ground and process and get into industry, and such a critical strategic metal, I'm referring to silver. It's shocking that what we get paid for such a critical metal. And I've said a dozen times, and I don't get a lot of traction, unfortunately, because I feel somewhat alone often. The miners really need to get together and create a new system. And why does look at how uranium trades. It's a buy contract, and then there's no futures market. So you know, oil, you know, I think oil trades more fairly than because there's so many big players in it. It's more supply demand fundamentally driven, but even it's politically driven to a point. But yeah, I just think we need to get rid of the COMEX. I think the COMEX is really the problem. You know, when you can, you know, write a billion ounces of silver in a single day, when the miners are only producing 800 million ounces of silver in a full year, you know, that shows you there's a problem.
Mm-hmm. So considering exactly that, Keith, considering the hedging and de-risking mechanism that the futures markets do play, what do you see could you see as a replacement for that system instead?
Well, I think the miners just have to break their relationship with the banks, and it's hard. It's hard to do, and you know, the problem is, you know, a miner produces two types of products. One is a smelting, like a concentrate, where, you know, which is a combination of a variety of different metals and basically just a pile of black powder, and it's very hard to get rid of. Each one of these piles, depending on what mine it comes from, they're all chemically different, and they all take different processes, and the miner has to find a home for this product. And most of these homes are in China or Korea, or, you know, in some cases Europe or potentially Japan. But there's very few in North America. There's only a couple. So it's hard to dispose of this concentrate. And there's lots of pollutants in this stuff. You know, it's you're wanting the silver and the gold, of course, or the copper, because that's where the money is. But there's lots of things. There's selenium. There's, you know, all kinds of bad arsenic. There's all kinds of bad stuff in there. Mm-hmm. So anyways, it's very expensive, and it's hard to break the relationship because you have a financial relationship with the smelter, who's got a relationship with the bank, and they already have homes for all the metal, right? So that creates a very difficult thing to break and rebuild that system in some other way. You almost have to own the smelter. And which a lot of mining companies don't own their own smelters. Doré producers, of which First Majestic is, well, fortunately, all our 4 mines produce doré bars, and this is a nice refined product. It's and there's lots of places to send it. You know, in the United States, there's probably a dozen refineries in the United States, and then Canada. So it's easy to get rid of, easy to refine to a triple digit or triple digit. A 999. Pure commercial bar, you know, 1,000 ounce. It's very easy to do. And we can warehouse these bars, which we do. You've seen us hold back our sales a number of times. And we can do that because we have these physical bars. You know, if we were producing a concentrate, we couldn't do that. So for a company like ourselves, it's easy for us to break that relationship with the bank because we just eliminate them. And we say, and then we go right to Sony or Apple or whomever and say, yeah, we'll give you our supply. We're not going to fix a price. You know, you're still going to be subject to price fluctuations, but we'll guarantee that you get X amount of our metal. And then those are the kinds of contracts I think that we should be looking to achieve.
So when we don't have a COMEX, when we don't have futures contracts, so all these paper contracts smashing the price down, like we have in the metals market, you can have a look at other commodities. Right here, rhodium. Have a look at that bubble. And this is what happens. And I love investing, or more so trading. I love trading in commodities that don't have futures markets because you do get bubbles, and it's very very exciting, but very profitable. But you got to be nimble because they do turn into bubbles. I will talk more about rhodium in a future video because I actually like rhodium moving forward. But you can see, you know, just in 2020, rhodium around 5,000, bubbles up in a very short period of time to 30,000, and you know, these are the type of moves that we would see if there was no futures market in the precious metals, gold and silver. We would see the true value of gold and silver. And I believe that we will see it soon, and that we'll see silver in a bubble. So here we've got lithium, and lithium also doesn't have a futures market. And well, look at that, you know, below 50,000 earlier this year. 250,000 now. That's what I call a bubble. And so when you've got supply and demand, without a futures market always tamping down the price and the value, this is what we can expect if we were able to break the COMEX market, the futures market. So uranium's another one, and we know Sprott has just got into uranium in a big way. And once again, I'll talk about uranium in a future video because I am very bullish on it. And even at these prices, even though they've doubled in the last couple of years, the price of uranium has doubled in the last couple of years. I'm very, very bullish on it. And once again, we can see without that futures market, these things can turn into a bubble. And I like buying things that can turn into a bubble, but you got to be nimble. And also here, magnesium doesn't have a futures market. Have a look at that bubble. Just this year, under 15,000, almost hit 60,000. So, this is, I hope you guys are getting the picture of what trading without futures market could mean for true fundamental prices. I hate, the futures market. I hear the argument. I've got friends who are futures traders, and I've got some farmers who are clients, and they trade futures. And I get why futures were created. I really do. But they have been abused, and they are used in particular against the metals to keep them down. Central banks and governments don't want the metals to show their true value, because that will expose their fraud. But I just wanted to share that this is what's possible if we can break the COMEX, if we can move silver into a market where the true value can be shown. Then we could see a very, very nice bubble in the silver market. Because we know the demand is there, and to be honest, same thing with copper. I could add copper into this as well, and I'll talk more about copper in a near future video as well. In fact, I'll talk about it in my 2022 predictions, because it's one I'm very bullish on next year. So definitely, guys, listen to Keith Neumeyer. Definitely support what Keith's trying to do, and anybody else in this industry. Support First Majestic Silver. They're not a sponsor of this channel, but hey, Keith, if you're listening, happy for you to sponsor this channel. I'm a big supporter of yours, and big supporter of First Majestic Silver, and also the Sprott PSLV, the physical trust. So definitely support those. Don't support the SLVs. Don't support the futures market, and don't support the unallocated silver market. So anyway, what do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Anyway, guys, take care, and I'll see you again on another episode of Finance Uncut.